Okay, let's unpack this. We've got quite a bit of material here, this Compasscope research report and snippets from Adobe's Q1 earnings call. The goal, really, is to cut through it all and get to the core insights about Adobe Inc.
Exactly. That's what these deep dives are all about. We take the source material you provide and, pull out the essential stuff, the key takeaways, without getting bogged down in every single detail.
Right, so today it's Adobe. Most people probably know them for things like Photoshop, maybe Acrobat.
hmm
And using only this Compasscope report and the Q1 call transcript, we want to figure out, okay, what's their business really look like? Who are they up against?
Yeah, what's their growth plan? What could trip them up?
And ultimately, what are the main things you should be paying attention to right now if you're following the company?
Consider us your guides through this info dump. We'll try to make sense of it all.
Perfect. Let's jump right in then. How does this Compasscope report frame Adobe's business? Like at a high level, what do they actually do?
Well, the report describes Adobe as a pretty diversified software company. Fundamentally, they're focused on content creation, managing documents, and increasingly digital marketing tools.
So design, PDFs, marketing campaigns, that kind of thing.
Pretty much. If you need to make something visual, handle a PDF reliably, or manage complex online marketing, Adobe wants to be the solution you think of first.
And the business model? Still selling software in boxes like the old days.
Oh, no, not really. It's overwhelmingly subscription-based now. Software as a service, or SaaS. You pay regularly to access their tools, mostly through their big clouds.
Oh, yes, the clouds. There's Creative Cloud, Document Cloud, Experience Cloud.
Exactly. Those are the main pillars.
Okay, let's start with the one people probably know best, Digital Media, which has Creative Cloud in it.
Right. Digital media is kind of the engine room. It covers both creating content and handling documents. Creative Cloud is the big suite, Photoshop, Illustrator, Premiere Pro for video, After Effects, Lightroom, the industry standards.
The heavy hitters for professionals.
Yeah, definitely. But it also includes things like Adobe Express, which is more entry level, and Frame.io for video collaboration. So graphic design, video, photos, web design, it's all in there.
And the document part of Digital Media.
That falls under Document Cloud. Think PDFs and e-signatures. Adobe Acrobat is the main player for editing and managing PDFs. They invented the format, right?
True.
And then there's Acrobat Sign for electronic signatures. The sources also make a point of mentioning the new AI assistant they've added into Acrobat recently.
Okay, so Digital Media Creative, Creative Cloud, plus Document Cloud. Got it. What about the other big one, Digital Experience? It sounds more corporate.
It is. Digital Experience is aimed squarely at large businesses, the enterprise market. It's all about marketing, tech, and customer insights. This includes the Adobe Experience Cloud platform itself, plus a bunch of apps on top of it.
Like what kind of apps?
Things like Adobe Analytics for crunching customer data, Adobe Experience Manager for websites, Marketo Engage for B2B marketing automation, Adobe Commerce for e-commerce, Adobe Workfront for managing marketing projects. It's a whole suite for big companies trying to personalize customer experiences online.
So, yeah, very different user base than, say, a freelance photographer using Lightroom.
Totally different. The report also mentions a smaller bit, publishing and advertising, which seems to be older stuff. But really, the core today is digital media that's creative and document and digital experience. Compasscope basically groups them by function: content creation, document productivity, and then digital experience marketing.
Okay, that gives us a good handle on the what. Now, how does Compasscope see them competitively? Who are they fighting against? And what advantages does Adobe have?
Compasscope highlights several big strengths. One is definitely high switching costs, particularly in digital media. Once you and your team are deep into Photoshop or Premiere Pro workflows,
It's a massive pain to switch.
exactly. These tools are industry standards. Compatibility alone keeps people locked in. And the fact that Adobe created the PDF format gives Document Cloud a really enduring edge. It's just ubiquitous.
Makes sense. What else?
They also point to the ecosystem effect. Having Creative Cloud, Document Cloud, and Experience Cloud allows them to cross-sell solutions. And the integration of their AI, which they call Firefly, is seen as a plus, boosting creativity and automation, positioning them well for AI-driven content and marketing.
And I guess the network effects and the subscription model help too.
For sure. Their dominance in creative fields means more people use their tools, which reinforces their position. And the subscription model, while maybe a tough transition years ago, now provides stable recurring revenue, makes upselling easier, and drastically reduced piracy issues.
Okay, so they've got some serious moats. But what about the chinks in the armor? What challenges does the report mention?
Well, their premium pricing is a big one. It makes it harder to gain traction in markets that are really cost-sensitive. Think small businesses, individuals, emerging economies. That's where competitors offering cheaper or free options, like Canva, really pose a threat.
Canva. Yeah, they come up a lot. Very different model.
Very different. Another challenge noted is the whole blocked Figma acquisition. That really highlighted the regulatory headwinds Adobe faces trying to grow by buying up innovative competitors, especially in areas like collaborative design, where Figma was leading and Adobe, frankly, wasn't.
So M&A isn't an easy path for them right now.
Seems that way. Plus, they face really intense competition in that digital experience space from established giants like Salesforce and Microsoft. Adobe's a big player there, but maybe not the dominant force like they are in creative tools. There's also mention of maybe slower than hoped for uptake of some new AI offerings by enterprises, the risk from new AI startups disrupting things, and just general vulnerability if the economy slows down and companies cut IT budgets.
The report directly compares them to a few key rivals, right? What are the quick takeaways there?
Yeah, Compasscope lays it out. Against Microsoft, Adobe's strength is creative specialization. Microsoft is huge in enterprise cloud and analytics, often bundling things, but doesn't have Adobe's creative cachet. Against Canva, Adobe rules the pro and enterprise creative world. Canva wins on ease of use and low cost for individuals and small businesses. Canva's a threat on price, but lacks Adobe's deep enterprise features and AI like Firefly. Against Salesforce. Salesforce dominates CRM and the customer journey side. Adobe's Experience Cloud as a major competitor became later. Salesforce, though, doesn't have Adobe's content creation tools. Against Salesforce. They also touch on Autodesk, which is more specialized in engineering and entertainment. Figma, the leader in UI/UX design, where Adobe stumbled with the acquisition attempt, and Google, offering cheaper collaborative tools but not really competing at the pro creative level.
Okay, so if you had to summarize Compasscope's view on Adobe's competitiveness,
the conclusion seems to be that Adobe has a stronger, more defensible position in its core markets, professional creative software and document management. That's thanks to the user base, the industry standards like PDF, those high switching costs, and now their AI integration with Firefly.
So solid core.
Very solid. While competitors like Microsoft and Salesforce have massive reach, they don't really duplicate Adobe's creative leadership. Canva is definitely a risk at the lower end, and the Figma situation was a setback. But overall, AI seems to be strengthening their hold on their main turf.
Which leads nicely into their strategy. Given that competitive landscape, how are they planning to grow? What does the roadmap look like according to these sources?
Unsurprisingly, generative AI Firefly is right at the heart of it. They're weaving it into everything. Creative Cloud, Document Cloud, Experience Cloud. The idea is to make the tool smarter, faster, more automated.
And is the plan just to make the existing subscriptions better, or were they trying to charge extra for AI?
Both, it seems. The strategy definitely includes new ways to monetize AI directly. Think tiered pricing, where you pay more for advanced AI capabilities or higher usage limits, and specific AI services, particularly targeting enterprises with things like Firefly Services APIs.
Okay, AI is central. What other growth levers are they pulling?
Cross-selling is a big one. Getting customers using Creative Cloud to also adopt Document Cloud or Experience Cloud and vice versa. They're particularly focused on connecting the creative side with the marketing side, using platforms like GenStudio.
GenStudio? What's that?
It seems to be their platform that integrates AI-powered content creation directly into marketing workflows and customer journey management. So bridging that gap between making the ad and delivering the ad, basically. They're also pushing beyond just the pro market, trying to grow their user base with freemium offerings, think Adobe Express for simple design, or the free web and mobile versions of Acrobat. The goal is to get more people into their ecosystem.
And then hopefully convert some of them to paying customers down the line. The classic top-of-funnel approach.
Exactly. And alongside that, continued focus on expanding in the enterprise market, beefing up the Adobe Experience platform with more AI for personalization and marketing insights. GenStudio is a key part of that enterprise push.
Any other strategic pillars?
Yeah, the sources mention ongoing product innovation, not just AI, but also in areas like 3D, video, mobile tools, developing new pricing tiers linked to these new features to encourage upgrades, plus geographic expansion, trying to grow digital subscriptions in less penetrated regions, and of course, just continuing to grow that core recurring revenue from the SaaS model.
How does Compasscope rate the potential of this strategy? Do they think it'll work?
They seem pretty positive on the profit potential. They highlight the AI monetization, the synergies from cross-selling, and the tiered pricing as having significant upside. Firefly, specifically, is called out as potentially high margin.
And the likelihood of actually pulling it off.
They rate the achievability as high for the core SaaS businesses, Creative and Document Cloud, where Adobe is already so dominant. But they see more moderate challenges in the super competitive digital experience market and also in making inroads in those very price-sensitive segments like SMBs and emerging markets.
Makes sense. What about the risks attached to this strategy?
The report flags several things. Potential subscription fatigue is when users getting tired of paying recurring fees. Price sensitivity, especially outside the core professional user base. The intense competition we talked about, Canva at the low end, Microsoft and Salesforce at the high end. Regulatory hurdles could block future acquisitions, limiting growth options, and a broader economic slowdown hitting corporate IT and marketing budgets is always a risk, especially for the Experience Cloud side.
So, summing up CompassScope's take on the growth prospects.
They seem to conclude that Adobe has stronger long-term prospects than a number of its peers. They point to Adobe's unique position, its lead in AI integration within its fields, the potential of tiered pricing, and just the sheer strength of its brand loyalty. The risks are real, but that entrenched core business gives them a lot of stability to pursue these growth avenues.
Okay, that naturally brings us to execution risk. Even with a good strategy, things can go wrong in implementation. What specific risks does CompassScope highlight here? What could trip Adobe up?
Well, the heavy reliance on making generative AI work and work profitably is definitely called out. Success hinges on getting people, especially pros and enterprises, to actually adopt and pay for Firefly features. And it's such a fast-moving, competitive space.
Right, the AI race is intense.
Absolutely. The blocked Figma deal also signals execution risk. It suggests growing through major acquisitions might be tough, limiting their options if internal innovation isn't enough in certain areas. And then there's the challenge of executing effectively in the enterprise marketing space against Salesforce and Microsoft. Getting big companies to adopt new platforms like Gen Studio might be slower or harder than planned.
What about that freemium strategy? Using free tools to attract users.
Yeah, that carries risk too. The challenge is effectively converting those free users of Adobe Express or the free Acrobat tools into paying subscribers. It's easy to attract free users. Getting them to open their wallets, especially with cheap alternatives available, is harder. And that premium pricing overall remains a risk factor, potentially hindering adoption where budgets are tight. And we mentioned macroeconomic risks impacting spending. Plus, in Creative Cloud, they need to maintain high customer retention. If cheaper tools become good enough or users just get tired of the subscription, that could hurt. And finally, navigating the complex regulatory and ethical landscape around AI and data privacy could also pose execution challenges.
How does CompassScope frame Adobe's execution risk compared to its competitors?
They generally assess Adobe's overall business execution risk as moderate. They acknowledge the challenges, AI competition, enterprise execution, the freemium model, but balance that against the stability provided by Adobe's dominant position in its core creative and document markets.
So not extreme risk, but not negligible either.
Right. Compared to more narrowly focused competitors like maybe Canva or Figma, CompassScope sees Adobe as lower risk. But compared to the big diversified enterprise players like Microsoft or Salesforce, Adobe's risk is seen as comparable or possibly even higher in some aspects, specifically because of that premium pricing model and the significant bet they're placing on specifically monetizing AI, not just using it to enhance existing products.
Okay, that's a really helpful framing from the report. Now let's bring things right up to date with the Q1 fiscal 25 earnings call. How did Adobe actually perform recently? What were the highlights?
They reported a strong quarter, actually. Record Q1 revenue of $5.71 billion, which was up 11% year over year. Non-GAAP earnings per share also grew nicely, up 13% to $5.08. And importantly, they reaffirmed their financial targets for the full fiscal year, so a solid start.
And didn't they announce a change in how they report revenue? Something about customer groups?
Yes, that was a significant announcement. They're moving to report subscription revenue based on two main customer groups, which they say better reflects their strategy. The groups are, first, business professionals and consumers. This pulls together all the Document Cloud revenue plus Acrobat and Adobe Express subscriptions that sit within Creative Cloud. This group generated $1.53 billion in Q1 subscription revenue and grew a healthy 15% year over year. Second, creative and marketing professionals. This includes all the digital experience subscription revenue, plus the rest of Creative Cloud, basically the traditional pro creative tools. This is a bigger piece. $3.92 billion in Q1 subscription revenue, and it grew 10% year over year.
That's quite a shift. Grouping Acrobat with consumers and business pros, separating it somewhat from the core pro creative suite. Interesting. How did the traditional segments, digital media and digital experience, perform in Q1 based on the old structure?
They both did well. Digital media hit $4.23 billion in revenue, up 12% in constant currency. Its ARR, that's the annual recurring revenue metric, ended at $17.63 billion, also up over 12%. They cited broad growth in Creative Cloud, boosted by Firefly services, big enterprise deals, and web mobile usage. Document Cloud saw strong demand too, better free-to-paid conversion, and the AI assistant rolling out in more languages. They specifically mentioned strong growth in emerging markets for digital media and digital experience.
That segment brought in $1.41 billion in revenue, up 10%. Subscription revenue specifically was up 11%. They talked about momentum in their content management, data analytics, and customer journey tools. A key metric they highlighted was that subscription revenue for the Adobe Experience Platform, AEP, and its related apps grew almost 50% year over year. Wow, nearly 50% growth for that core enterprise platform sounds significant.
It does suggest strong uptake there. They also mentioned that their Gen Studio solutions that integrated creative and marketing workflow offerings surpassed $1 billion in ending ARR book of business, signaling good traction. And they saw better customer retention in the enterprise segment.
Okay, let's double-click on the AI monetization piece from the earnings call. That seems critical to their story. What updates did they give?
Yeah, it was a major focus. They emphasized that AI features are already impacting billions of dollars of their existing ARR, basically making the core products stickier and more valuable, helping acquire and keep customers. But the big news was the introduction of a specific metric. New AI book of business.
New AI book of business.
Yes, this specifically tracks revenue from standalone or add-on AI products. Things like the paid Acrobat AI Assistant, subscriptions to the Firefly app or Firefly services for enterprises, and Gen Studio. They reported this new AI book of business exited Q1 at over $125 million.
Okay, $125 million, is that a lot relative to their overall revenue?
It's still relatively small compared to the total $5.7 billion quarterly revenue, but the key thing they stated was their expectation for this specific AI book of business to double by the end of their fiscal year 2025.
Doubling in roughly 3 quarters? That's ambitious. It shows they're serious about directly monetizing AI. How's the actual usage of these tools looking?
Growing fast, according to them. Usage of the Acrobat AI Assistant apparently doubled from the previous quarter, and they're adding more languages and features, like for legal workflows. Firefly usage numbers are huge. They said over 20 billion assets generated since launch, and they're now doing over 1 billion generations per month. Interestingly, they noted over 90% of paid users of the Firefly app are generating video content.
Video seems like a big push for Firefly then. Any other product news from the call?
Quite a bit, actually. They mentioned launching a new Photoshop mobile app and web experience, rolling out the Firefly video model officially, and adding AI features into beta versions of Premiere Pro and After Effects. They threw out some stats suggesting significant generative AI usage within Photoshop and Lightroom, around 30–35% of monthly active users. On the Document and Express side, they highlighted strong growth in monthly active users for Acrobat and Reader, a 10-fold increase in Express usage coming from within Acrobat, and rapid growth in Acrobat web usage driven by sharing features and integrations. Adobe Express itself is getting more AI features and seeing good B2B and student adoption.
And on the enterprise front, beyond the AEP growth.
Strong demand reported for Firefly services and custom AI models for enterprises integrated within Gen Studio. They mentioned over 1,400 custom models created since launch. They also highlighted momentum in partnerships with major tech companies and ad agencies, and landing more large One Adobe deals that bundled multiple products across creative and marketing for big clients like Microsoft, Disney, JP Morgan Chase, Ford, and others.
Okay. And financially, besides revenue and profit, any other key numbers?
Cash flow was very strong, a record Q1 figure of $2.48 billion from operations. They have a solid cash position of over $7 billion. They bought back a significant amount of stock in Q1, $3.25 billion, and still have a lot authorized. And their RPO, remaining performance obligations, basically contracted future revenue, stood at nearly $20 billion, up 12% year over year, which gives them good visibility.
And they gave guidance for Q2.
They did, targeting total revenue between $5.77 billion and $5.82 billion. They broke down targets for digital media and digital experience revenue as well. And non-GAAP EPS guidance is between $4.95 and $5 for the second quarter.
All right, so we've covered the business structure, the competition, the growth strategy, the risks, and these fresh Q1 results. Let's try to synthesize this. Based on everything in the Compasscope report and that earnings call, what are the absolute must-watch items going forward, the critical factors?
Compasscope really helps prioritize here. Based on their analysis, the top-tier things to keep a very close eye on are
Adoption and monetization of generative AI. This is huge. Yeah. How well are they actually converting AI features into paid upgrades or new subscriptions via Firefly services, Acrobat AI Assistant, etc.? Is that new AI book of business really doubling as they project? And how is the AI competition shaping up?
Okay, AI monetization is number one. What's next?
Number two, competition in key segments. You have to watch the pressure from Canva at the lower end of creative, potential disruption in UI UX from Figma-like tools, and the constant battle with Salesforce and Microsoft in the high-stakes enterprise marketing space. Are they holding their ground, gaining or losing share on these different fronts?
Makes sense. Keep the competition in focus. Number three,
enterprise IT and marketing spend. Adobe's experienced cloud growth, and increasingly parts of Creative Cloud too, really depend on corporate budgets.
Yeah.
So tracking macroeconomic trends and specifically how much companies are willing to invest in marketing technology, especially these newer AI-powered solutions, is critical. A downturn could really impact that segment.
Right. The macro environment matters a lot for enterprise sales. And the fourth high priority item.
Number four, freemium to paid conversion and SMB growth. How successful are they really at turning those free Adobe Express or Acrobat web users into paying customers? This is vital for their strategy to expand beyond the traditional pro base, especially into small businesses and emerging markets where price sensitivity is high.
Got it. So AI monetization, competition, enterprise spending, and freemium conversion are the big four. What about things that are still important, but maybe a slight tier down in immediate priority?
Compasscope lists several as moderate priority. Things like the broader macroeconomic and geopolitical risks, inflation, currency swings impacting subscriptions, potential regulatory and ethical hurdles specifically around AI, which could slow things down, how well the new pricing tiers are actually adopted by customers, the overall regulatory environment for future M&A, and managing user retention and subscription fatigue across their massive user base.
And the lower priority factors. Still on the radar, but less critical day to day.
Yeah, things like the general pace of growth in emerging markets, overall product innovation outside the main AI push, and RPO execution, basically, ensuring that contracted revenue actually turns into recognized revenue smoothly. Important, but maybe less volatile than the top-tier items.
Okay. So stepping back after this whole deep dive, what's the essential story of Adobe right now, drawing only from these sources?
I think the core narrative is this. Adobe has this incredibly strong, profitable foundation in its creative and document software businesses, real dominance there. Building on that base, they're making a very aggressive push into two main areas. First, the lucrative but competitive enterprise marketing technology space, and second, leveraging generative AI, specifically Firefly, across everything they do.
So defend the core, attack new territory with AI.
Pretty much, AI is meant to both strengthen the core products and create entirely new revenue streams. The recent Q1 results suggest they're getting some early traction, especially with AI monetization starting to show up as a specific metric and solid growth in enterprise platforms.
Yeah.
But they're doing this against formidable competitors on all sides, from nimble, low-cost players to enterprise giants. And there are real execution risks involved, especially around making that AI bet pay off financially, navigating the price sensitivity outside their pro base, and winning those big enterprise deals consistently.
So understanding that blend, the rock-solid creative document core, the big push into enterprise marketing, the attempt to reach broader audiences, and AI being woven through it all, that's really key to grasping where Adobe stands and what its future might hold.
Absolutely. It's about balancing that defense of their existing empire with the offense needed to capture new growth, and AI is supposed to be the super weapon for both campaigns.
Which leaves us with a final thought, maybe something to chew on. Adobe's now explicitly splitting its reporting around these two big groups, creative marketing pros versus business pros consumers. How well can a single company truly optimize its strategy and execution for two such different audiences simultaneously? Is there a risk of trying to be too many things to too many people?
That's a great question. And related to that, while this new AI book of business metric is concrete, they want to double it to maybe $250 million this year. How significant is that compared to the potentially much larger but harder to pin down value AI ads, just by making their existing $20 billion plus ARR businesses stickier, reducing churn and justifying current subscription prices, which affect the direct new revenue or the indirect enhancement of the core will actually matter more to Adobe's success in the long run, something to definitely keep watching.
This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.